Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, April the 7th, the year 2020. Let's talk trading. In your face. Yeah, that's right. I'm going to have to get in your face. But first, you have to remember these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, remember, for your risk management, do not lose any more than you're willing to lose on any one particular trade. Otherwise, you can get taken out of the game. So yeah, that's right. In your face. What could that be? Well, I was listening to some other interviews of traders, and it's funny how I will agree with some things that they say, and then of course they'll say something like the trend or talk about a squiggly line indicator, and then it just kind of lose it. But one of the things I realized was that I think some people out there trading, they're really not serious about it. So I'm gonna have to kind of get in your face. First off, why are you trading? You have to have a reason to be trading. Are you trying to make income, grow your account? What is it you're really trying to do? Because if you don't have that clear in your mind, you know, you are probably not going to be very successful. You need to have a clear, simple reason why you are trading. So if you're trading for income, are you trying to make $100 a day, 200 a day? What is it you really want to accomplish? And is your trading account big enough so you can actually make that much money in a day? Or are you watching or listening or reading some of those magnificent claims? If you get this indicator, this divergence, this or robot that, or what's the other one out there now that they're promising you? Look at these 400 pips here and 300 pips here and 579 pips there. I mean, it's just crazy. Okay, it's crazy. Yeah, you can look at the left side of the chart, all the candles over here, and say, yeah, if you got here and here, yeah. But when you're looking at the candle that's right here, that current one, and it goes up a couple, then it drops down, four or five, and you're looking at red, it's a whole different ball game. It's a whole different thing. Now, what else? In your face. Some people ask if I mentor. Yes, I mentor. That's what I'm doing right now on the video. What is it you really want me to do? If you think about what do you want from a mentor? Because if I were to sit down next to you, we would pull up the screen, right? I mean, really, we would pull up the screen, which, where'd I put it? Right here. We pull up the screen. And I say, you see this red line? When this candle's red, you go short. You see this green line? When this candle's green, you go long. Because Walter and I, we talk almost every day now about, and we trade together sometimes. And the bottom line is, it doesn't matter the reason why you enter right here. Doesn't matter what any of this other stuff says. Because once you enter the trade, it's all about the exit. And so, what do you do? When do you do it? That's why I talk about the exit playbook. When you're up 1 pip, what do you do? When you're up 2 pips, what do? You need to know ahead of time. You need to know if price just jumped up really quick, 5 pips, and you're sitting up 5 pips, what do you do? Do you take it or do you hesitate? Do you wait? What do? You have to know this ahead of time. So that's why I said I have to get in your face because I don't think it's really hit some people what this is all about. I mean, if you think about it, there's all these different things people are showing you entries. Entries. When this line crosses that line, when you see this candle pattern, when it's in this, supply or demand zone or support or resistance area. They talk about all the reasons you should get in a trade. But do they talk about any reasons you shouldn't get in that trade? Of course not. They're missing at least half of the picture. At least half. It's that simple. I mean, we're sitting here, we're looking at this thing, and it's just kind of sitting here, right? It's telling you don't buy because it's a red H1. If it goes green, it'll tell you don't short. I mean, this is really simple stuff. It really is. But what makes it so difficult? Part of the reason it's so difficult is either A, you don't have a detailed plan or procedure, and as Deming says, if you can't describe what you're doing as a procedure, then you don't know what you're doing. You have to have a clear plan. Then that's not enough. See, the planning, that's the preparation. If you remember, I put up that chart about being lucky. So part one is the preparation. That's your plan. You know what you're going to do ahead of time. Number two is you take action. So when price hits this green line right here, you don't even think about anything. You execute. You're a trained monkey. I've talked about that before. That's it. Because you're following your plan. Now, as price moves in your direction, you decide to wait or to exit. Maybe you exit part of the position. Maybe you take off the entire position. And if it starts to move against you, 1 pip, 2 pip, 3 pips, 4 pips, when you decide enough is enough, and you've already decided that ahead of time, you take that loss because you know you could probably make that loss up in somewhere between 1 and 3 trades. Because if your stop loss is huge, maybe 100 pips or something, it's going to take you a while to make up 100 pips. But if your stop loss is tight, 6 pips, 8 pips, 10 pips, you can make that up in, so probably 1 to 3 trades. Maybe it takes you 5. But the fact of the matter is you have to have a plan. You have to execute the plan. And the main thing is that you have to know how you're going to react. Because sometimes you don't have time to think. You just have to do it. You have to execute it. You have to have faith in your plan. And as the traders that trade alongside me sometimes know, you have to have faith in the statistics. You have to believe your statistics that, hey, price is going to range a certain number of pips that during that hour. Okay, you're going to say, you know what, it crosses above and below these lines a certain amount of times, and it closes above a certain amount of times. So here, 5 out of 9 times it crossed above, and 4 it closed above. So once it crosses above, that might say, you know what, maybe I can get a couple extra pips because chances are it's going to close above it based on recent history. But it might not. That's why I'm telling you right here in your face that the thing that matters most after you put the trade on is what you do. It's what you do because the market's going to do what it does. So it's all up to you. As the captain said to Luke in Cool Hand Luke movie, it's all up to you. And you're just going to have to realize that, you are going to take some losses, but your losses shouldn't be any larger than what you've already set out as your parameters. So once again, why are you trading? You're trying to make money, you're trying to grow the account? Yeah, of course, that's everybody wants to make money, but what for? What's the reason? Is it to pay bills? Is it to buy a Ferrari? Let's be reasonable here. Why? You've got to put that down. Is it just a game, a pastime, a hobby? But I get these emails from time to time from somebody that wants to they got a job and they want to know a system that they can just put the trade on, and when they come back, they can rake in lots of pips. It doesn't really work that way all the time. Maybe some of the time, but sooner or later you might get your fingers burned. I mean, sure, you could put your trades in ahead of time. You take yesterday's high, you put a buy there, you take yesterday's low, you put a short there, you put maybe a 5 pip take profit, 5 pip stop, or something like those lines, or 10 and 10, or 10 profit, 5 loss, and then you come back and see what happens. Yeah, you can do that. It's quite possible. But then you're not really kind of trading. You're kind of dabbling, because you're not in front of the screen. You're not practicing the art of trading. So, I mean, I can show you all these different statistics, okay? I mean, you guys know, have been watching my videos, like with the rat zone here. It's like, look, 97% of the time, price is going to close below this line. Or I'm sorry, it's not going to close below it, but the close minus low is going to be less than the distance between, it's going to be less than this distance right here, okay? 97% of the time. 49% of the time, high minus close is going to be less. Now it's 48. It's going to be less than this level right here. But does that matter in this trade? No, it doesn't, because this trade is live. This is doing, you know, this is real trade, real money, and you have to say, hey, right now you're up. If you got in at the double O, you're up almost 2 pips. What do you do? What do you do? You're up almost 3 pips. What do you do? What do you do? Now it just dropped down to less than 2. Now it's at 2.5 pips. What do you do? That's what you have to decide. Do you take the pips? It's like, hey, you know what? If I can take 2 pips 5 to 10 times a day, that's 10 to 20 pips. I can pay my bills, or I could go on a vacation. Not that you might want to right now, but the point being is, if you have that plan, you know what? Each time I do it, I'm going to try and take my 2 pips. Okay, it's at 3.6. Do you stay? Do you bail? Do you wait for the candle to close? I mean, this thing could slam down on you real hard. You don't know. You're up 4 pips. What do you do? This is trading. I mean, let's come back to the chart here. What did I say? If this candle's green, when you get to the line, you buy. That's trading. That's it. There's nothing more to it. Does it matter the reason why? No, it doesn't. Nothing. It doesn't matter what squiggly lines crossed, or crossed over, or anything else. What candle pattern we have. None of that matters once you put the trade on. So it's like you put the trade on here. You have your reasons. Other traders have their reasons. None of it matters. I can't say that enough. You have to understand that. If you think that I can mentor you and teach you something magical, that every time you get in a trade you're going to win, I'm the wrong guy. Okay, it's not going to happen. I mean, even with the buying and selling, indicator here, we know what's going on based on, if you hit the F9, based on right here. You see, right here we got buying. Why? Because it moved above this area here, so right now, if the ask comes below right here, then we've got selling, because price can't move unless, this crosses. Yeah, it can move within the spread, but it's not moving anywhere unless this line crosses below this line, or this line crosses above this line. Otherwise, it's just stagnating. Okay? So right now we got top of the hour. What do you do? If this H1 is red at the line, and it will be, you go short at 109.00. If it's green at this line, which it would be, you go long at 109.10. Remember, these videos are for educational purposes only. So It's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't, come down here, hit subscribe.